Tom White at TD Ameritrade joins me now for Stocking Up, and we've been taking a look at Caterpillar in our show today, so now we get a trader's perspective on that stock. So Tom, what do you think here?
Yeah, I think it's going to be a little bit of good, a little bit of bad. The investigation into the tax fraud and the accounting fraud is probably going to result in a huge fine, and right now we've got some volatility picking up in the stock based on the uncertainty on how much the fine is going to be, what other sanctions might come about. So in that regard, I'm probably going to stay away from the stock until we get some more clarity on that. But at the same time, if Trump's infrastructure bill, his plans come to fruition and he gets a lot of infrastructure money to spend, Caterpillar is going to be a winner of that. John Deere is also going to be a winner of that. So in the near term, it's probably going to be some rough waters for Caterpillar, but I expect it to kind of ramp back up if those infrastructure builds get through.
Now you, as many traders are, paying attention to the financials. It's been a great place to be, and of course we have that Fed meeting coming up next week.
Right.
Everybody's pretty much thinking this rate hike is happening.
Yeah.
So what's your play on Citigroup?
Yeah, I think the expectations of the Fed funds market's up to 88% for that rate hike next March. And the Fed speak from Yellen and her crew of governors has basically been as hawkish as it's ever been. So the expectations are high and it's warranted. They expect 3 hikes this year. Who takes advantage of that? Asset gathering banks. And Citigroup's at the top of that list. The assets on their balance sheet, those quarter point hikes result in millions of dollars in them on the short-long spread. So going into that rate hike next week, Citigroup's already seen some jump as bonds prices have pulled back, yields are up. So I expect Citigroup to, go higher from here. I'm looking at a long position in there, anywhere from 62.5 up to 67.5, my price target. So, yeah, I think good things are coming for banks if those rate hikes come.
One last name on your list, and it is Nike.
Yeah.
You come back to this stock once in a while. A lot of traders do.
Yeah, it's out there. Nike's everywhere, right? They've run into a lot of trouble. Them, Under Armour, who's taking market share? Adidas overseas. They're ramping up a lot of their marketing, a lot of their sales over here. Nike's still under the gun here. They got earnings on the 21st. Expectations are pretty low into the earnings event. I expect them to beat on EPS. I expect them to beat on lowered top-line revenue. But what's going to matter is guidance, and that's what hurt Under Armour before. They had a mediocre quarter, but what they guided was really what killed the stock, and I think that same scenario might take place in Nike, and we've got to really watch that. And if it does go down, I expect that $54, $53 a share price level to kind of bottom out. But it did just have a technical golden cross where the 50-day moving average moved above its 200-day. So any surprise on that and a blowout number, maybe a little bit higher guidance, we could see that stock touch that $60 level again. But at that point, I'd probably be looking to get shorted. So,
well, thanks so much for coming on the show.
Thanks.